Whatever. No, cover
I
your.
want to see, no, because you have much more valuable information than I
No,
do.
I don't. Peter, you're talking. Sorry, and I'm not going to talk until you talk at least for 5-10 minutes. So, all right. With that being said, Peter's trying to get out of our recap. Everybody, this
I
is
am
our
not.
last
Travis is
recap of
being
the
a
year.
child.
He's like, I'm not going to say anything. I'm like, yes, you will. It's the last recap of the year. So,
He's
welcome.
treating me like a child. Granted, I'm acting like one.
Now you sound like my wife. Oh, welcome everybody to our officially last recap of 2019. It's been an awesome year. We've loved showing up every week. This helped us out too to get more consistent. Peter and I both struggled with bright shiny object syndrome, BSO, FOMO, fear of missing out. Like we always got distracted and bright shiny objects. We go down all these rabbit holes. We products we wanted to create together, and we get distracted easily. So having something that we could commit to that stayed us focused, helped us stay focused, helped us out. So thank you for showing up every week, watching these videos. We're about to cover our market. Peter's going to cover some trades he's making. I'm going to cover some trades I made. And of course, it's all for educational and informational purposes only. So with that, let me go ahead and turn the floor over to Peter. Actually,
All right, so yeah, last call, kind of bittersweet. This has been fun, but as we said in last week's video too, be sure to subscribe and hit the like button if you like the videos, but also hit the bell because you'll get notifications when we do put stuff out. We're still going to do things out here, but our weekly recaps are they're going to be more focused towards our Success Academy members. But if you've ever been on the fence on wanting to do this, and Travis and I both subscribe to the same theory that education diffuses fear. If you're fearful of this, but you've always wanted to do it, you want to take hold of your finances, your financial picture, and do stuff like what Travis and I do, you definitely want to subscribe and find out when the Success Academy opens. A brand new program coming out in 2020. It's going to be fantastic. So you don't want to miss it. I have one trade to cover, really. It's just one. I've talked about this before. It's trading Apple. I have an account size that can't afford to trade Apple call options. So I use Market Club, fantastic product that shows us, gives us trade signals that are extremely reliable. We use them in our Success Academy. We have templates that show us how to use them. And so I'm using Market Club as a trade signal for me for Apple. So I'm bullish on Apple. So I wanted to buy a call option, right? And a call option is a bullish strategy for Apple. I got the wrong chart up here. Got Macy's. We don't want to talk about Macy's. All right. So if we look at buying a call option, so 266 is what Apple's trading at. So the 265 is really closer to at the money than the 270, but you could do the 270 if you wanted to. It's, you're paying for a little bit of intrinsic value here on the 265, but that's what I went ahead and did, or that's what I would have traded if I were buying a call option. But on my account, $1,500 is what that thing would cost. So if I were to hit the confirm and send button, you can see it's great. My profit is infinite, but my max loss is $1,500. And based on the way we do our money management principles for this account that I'm trading on, it's too much. So how do we trade Apple without blowing out our account and risking too much? We just do, be careful. We just do a debit spread. So we change this to verticals, and we come over here on the call side and we make sure in our platform. So I'm going to do the 265, 270. That's what I did. You can see my positions, and you just click the buy button, and you'll see things are a little bit different. You don't get that infinite. Max profit anymore, but you don't have a $1,500 max loss. You have a $260 max loss. And for this trading account size, that is my 2%. So I'm golden. So that's what I did. I placed that. How do I manage it? I manage it the same way I would a call option. Even though it's a debit spread, it doesn't, if you guys are familiar with vertical credit spreads, or any type of selling strategy, you do not manage the debit spread the same exact way as the selling spread, because the 30-day rule applies here for a call option, and so it applies for our debit spread as well. You can go ahead and try it out and manage it the same way as a credit spread. You'll find out, like I did, that, hey, it's in the money and I'm not making any money. How come? Oh, it's got 3 days to expiration. It's no good. It's a debit spread. You own this, right? So that's what I did. My same exit strategies will apply. I'm using Market Club. I'll have my percentage loss, because that still applies. I paid for this, so I don't want to take a max loss of 245. That's just what my max loss is. But I'm not going to take more than a 50% loss. So if Apple decides to turn around and drop $7 in a day, which it can do, I will sell my debit spread back and move on to a new stock, or wait for Apple to continue to drop and give me a new entry signal. So that is it. The only other, I think that was it. Yeah. Nothing else to really cover. That's it, Travis. Oh, one last thing. So we will have a link to these awesome t-shirts. So if you want a t-shirt, Travis will put a link in the description below, and you can go out there and buy an OPF t-shirt. They come in different colors, different sizes, men's and women's. Sorry, plugging a product.
You're fulfilling a promise. I gave him a hard time. It's like, hey man, you promised us our shirts. So no, we have to thank Peter, because I just don't have the mental fortitude to deal with graphics and stuff. So Peter actually did this on his own. So you'll be helping support his endeavors. So definitely I'll put that link up under this description here. All right, so let me go ahead and share my stuff really quick. Kind of talk about the market first, and then my trades here. I'll come back to these PowerPoint slides. First, I want to point out the general market, which has been on a tear, all-time highs. And the biggest thing I want to point out is if I pull up you can see my chart, right, Peter?
Mm-hmm.
Okay, so I pull up a 2-year chart, and I kind of touched on this in one of my latest case study updates, where I'm walking people through our 5-year retirement plan, where if you look back into all of my old videos, there's only really one market correction I predicted, and that was like, I think it was around 2015, something about that. But I didn't predict the 20% correction in October 2018. Also didn't predict the 30% run up at the beginning of January 19, right? So think about that. Somebody with 20 plus years of experience, I didn't see that coming, didn't predict it. However, I still had 137% growth in my account. And I'm sharing this not to brag, but I want you to connect the dots if you didn't. I didn't have to know what the market was doing, and I still was able to double my account this year. A lot of people think they need to predict. They think they need to watch the news and figure out what's going to happen with tariffs. And no, turn that crap off, right? It's just making you depressed. It's giving you biases. I am completely in the dark, and I doubled my account. When I say I'm in the dark, I don't watch TV. I don't watch news. I have no clue what's going on in the world, but I doubled my account. It's because I recognize that I don't have those biases anymore. I don't have the, president said this, and this is going, XYZ is going to happen. I don't have that. I'll just kind of look at what the stock market is doing, and I trade accordingly. The market's falling, I'm going to trade it in the downward direction. If the market's going up, I'm going to trade it in an upward direction. So I want you to see that you don't need to predict to be able to win. People think that if you know where the market's heading, you can make a lot of money. And I'm saying, no, you can be completely clueless like me and still do okay. So that's one of my final lessons for 2019. Second lesson is I was going to share some trades I just recently placed. Where are they at? Let me pull up my notes real quick. LLY, Adobe, I won't pull up the charts, I'll just read them off. Ross, Disney, Roku, LMT, and one more. Let me just show you here. So Disney, LLY, LMT, Lulu, Roku, Ross are the ones I just recently placed. And so far they're doing okay. These are trades for 2020. So I'm setting up the portfolio for next year. And so far, it looks like it's up $1,900 so far, the overall account. I have some other trades in here too, but the overall account is up. Just for time's sake, I won't spend time evaluating those because I want to move on to another lesson here. Somebody emailed me, so now I'll pause my screen real quick and just riff on. Somebody asked me a question about how much, it's a common question, how much money should I start trading with, right? And I messed this one up because I answered truth. And I forgot, a good coach is supposed to meet you where you're at mentally and then guide you towards a proper way of thinking. That's a good coach. Sometimes I just tell people what they need to know and thinking it will reach them, but it won't. Like, a lot of people are falsely believe that it's okay to finance cars, right? So if I come to them and be like, no, that's a bad way, they're like, yeah, whatever. They just ignore me. Versus coming to them where they're at, saying, yeah, I know I used to finance cars and it's a struggle paying cash, blah, blah. But then gently guiding them towards a better way, which is paying cash. You literally can buy a brand new car cash every 2 or 3 years, doing nothing different than everybody else. You just have to follow a different blueprint. Literally, when I say nothing different, you're making the same car payment, you're just doing it in a different way. And you can buy a brand new car cash every 2 to 3 years. That handout is in the Success Academy, showing people how to do that. Anyway, gosh, I get so distracted. That was a total tangent. Back to what I was saying. So the reason I mean where they're at, because I answered this person and I was like, starting amounts don't matter, right? I was like, you can start with 100 grand or you can start with 2 grand. The starting amounts don't matter unless you develop the habits or the mindset of a successful investor. Like, you'll fail unless you develop the mindset and the habits of a successful investor. And starting amounts really don't matter because of that principle. And proof of that is when I started trading, I was part of a trading group, and it was a business owner in my group. I think he owned hotels and different businesses, 100 grand account, right? Multiple 6-figure account. Guess how much his performance was each year? He lost hundreds of thousands of dollars each year. He was a losing trader. He was always losing. And I'm like he was not following the system. He'd always pick losing trades. And I'm like, but he had so much money that it's like people with a lot of money think, oh, I have a lot of money, I'll be successful. Like, no, you have to develop the mindset and the habits of a successful trader. He was losing 6 figures a year, and he was condescending to me. He never would listen to me. I wasn't Trader Travis back then. I was still building up my account. But I'm trading circles around him performance-wise because I've been broke in real estate. I was like, I know what doesn't work, so let's just do the opposite, right? So I was more disciplined than following the rules, and my performance was outrageous. Like, people were always emailing me, asking me for help. That's actually what propelled me to start my website, because they were like, well, you're so good at this, can you just teach us? So anyway, so that proves that you could start, people think you need to start with a lot and you'll succeed. No, if you have an improper mindset, you will fail. I didn't meet that person where they're at. The way they asked that question, the implied truth in their question was they believe that you need a set amount to succeed. And I didn't meet them where they're at. I just told them the truth. So they came back with a reply, right? After I just told them starting amounts don't matter. You need to develop the habits and mindset of a successful trader, right? Right. That was the truth. And do you agree, Peter?
Mm-hmm.
Okay. Well, they came back with, but I'm starting with 4 grand. I just want to know if that's enough. I'm like, I just said starting amounts don't matter, right? But that was on me. That's when I realized, as a coach, I'm supposed to meet them where they're at, right? I need to tell them, yes, I know you believe that a certain amount is what you need, blah, blah. Yes, there are starting amounts that are more helpful to start with, 10 to 30 grand, but ultimately it really doesn't matter, right? And so, so anyway, to answer that question now and to correct that, if you want to give yourself a fighting chance, I'd say start with at least 10 grand. 5 is the bare minimum. But again, if you have the habits and the discipline of a successful trader, you will add money to that account. And that's what I want to get to today. Because we can look at my own case study. Now, let me show you my screen. That was my lead in there, as my wife says. Gosh, you have like 15-minute intros before you get to your actual point you want to talk about. So this case study now, I started with 10 grand. So this person is starting with 4 grand. If you have the high habits and the mindset of a successful investor, you don't try to trade your way to wealth. You don't try to trade 4 grand to $1 million, because you know that's not the best way to build wealth. If you study wealthy people, you will see that had a high savings rate, right? And it comes in stages, which I'll get to in a second. But part of being a successful trader is you have to add money to your account, whether you start with 4 grand or 10 grand. Start with 4 grand, you better be sacrificing somewhere. Stop going out to eat, get rid of your cable. I sold my car, so don't tell me how hard it is. I literally sold my car, all the furniture in my house. I drove around an old beater for years to come up with the money to put in my trading account, and we sacrificed, and it was worth it. So this started with 10 grand, but we continuously added what I call God contributions, get out of debt contributions, right? So 10 grand, and now where the account is at, it ended this year at 60,000, and that's in 2 years. That's a combination of trading plus adding money. Now, if I just tried to trade my way up from 10 grand to 60, it would have took a long time. So that is part of having the habits and the mindset of successful investors. I would say you have to add money to the account. And I have a graph pulled up here, and this is why. It starts in stages. Stage 1 is where you have a high savings rate, right? So a lot of your growth will be your own personal contributions, just like an 401k mutual fund account. You think you're doing better than you are, you're not. A lot of that growth is your own contributions, right? Because they're stealing your actual money and fees. But anyway, we won't get into that. So the first stage is you have a high savings rate plus investments, right? When you get to stage 2, and it usually happens around the 6-figure mark or maybe $1 million mark, in my experience, the 6-figure mark is where the compound interest from your investments take over, and your little measly contributions really don't make that much of a difference because your contributions take over. And that's what I have here as a graph of Warren Buffett. He's a billionaire, but look at the tail end of when he really earned most of his money. He at 52, he was only worth 376 million. It's a small graph. And let's look at 53. He was 620 million. But from 53 to 83, right? Just those 30 years, he went from 620 million to 58 billion. That's an example of stage 2 where your compound interest takes over. Your account is so big that it's constantly churning over, and your investments are compounding on top of each other. All right. And if you study, I'm part of this movement called FIRE movement. I was part of it before it was a movement. Financial independence, retire early. I'm not into the whole retire early part, but if you Google that term, you will pull up a bunch of people who exemplify what I'm talking about, the high savings rate. And they follow these principles here. So there are 3 pillars of financial freedom, right? There are how people build their wealth and retire early is either through real estate investments or having your own business. That's, if you study any wealthy person, it's usually narrowed down to these 3, the 3 core ones that I'm used to. Then you have the 3 accelerators of financial freedom. This is how you speed it up, right? So you can increase your income. It's earning more money. You can decrease your expenses, which we did. We got out of debt. We stayed like in a 700 square foot home until we paid it off, things like that. And then you can invest wisely. So I'm showing you the 2 bottom ones there, how to invest wisely by trading options, as well as decreasing expenses. And that's what the case study is, showing people, hey, it took us about 2 years to get out of consumer debt. And I'll share one success story here from a member who just emailed me, and I share these emails with my wife all the time. I'm backwards in this. I teach options, but I get more excited when I get these emails. When people tell me they've paid out of debt, I get those emails a ton. I just don't share them. Like, people are listening to me about getting out of debt, and they're literally getting out of debt. And I'll show you the importance of that here in a second. But just one of our members just recently emailed me and say, hey, they're out of consumer debt. Both their vehicles, RV, is paid in full. And I shared this with my wife. She was so excited. And I was like, yes, I absolutely love this. And so why is this important? Well, it goes to the 3 accelerators of financial freedom. And so let me go ahead and look at, let's look at this. This is roughly what our expenses were before we had kids and things like that, and how I grew my small trading account. Again, I didn't trade my way up to a big account. We got out of debt, and then we took what we had and we were paying in debt payments, and then we just started putting it in a savings account or a trading account. And if you do that long enough, you'll get to a 30 grand trading account in 14 months it took, versus, again, trying to trade from 4 grand to 30 grand. It will take a long time. But what I want to show you this, think about my situation and that client who just sent me an email saying, hey, we got out of debt. And while we only need 100 grand to consider ourselves financially free with no kids, 100 grand, we're earning anywhere from 1% to 2% a month on that trading options. That's $2,000 a month, right? In income, we're not spending our principal. That's just our profit, our income we're receiving. And our expenses at the time were maybe 1,000. Like, we're out of debt, right? We just have to pay for food for 2 young people. Our electric bill was like, our water bill was like $30, right? We didn't have any car payments. Like, we literally could have went on a cruise every month. Like, we just had all this excess money, right? Kids totally screwed that up. But anyway, I love my little kiddos, but yes, they totally screwed that up. So that's why we only need 100 grand, right? So our expenses are 1,000. Let's say 1,500 a month. But remember, our expenses used to be 2,200. So now let's do this. So out of debt, we only needed about 100 grand to consider ourselves financially free, right? But now let's look at our debt. Let's take 2,285 plus 1,500. If we kept the debt, we needed about 3,700 or about $4,000 to be able to service our expenses, right? Guess what size trading account we needed then? 200,000 plus the same 2%. We needed $200,000 just by keeping the debt. So we needed a double trading account size, right? We needed 100 grand more essentially. How long would it have taken us to save up an extra 100 grand? So this client right here is going to experience what I experienced. Now that they paid off their debt, their trading account they don't probably need the million that people think they need. They might need 300,000. You need about half. If you think you need $1 million, then you probably only need $500,000 if you got out of debt. Depends on how much debt you're in, but I'm just showing you an example here. Like, wow, that short-term thinking, like, I don't want to pay off my debt. I keep hearing Travis, and it goes in one ear out the other. I'm like, you're not seeing the big picture. That debt is holding you back from true financial freedom, and it's requiring you to have a bigger account size. But when you get rid of that debt, your trading account doesn't really need to be that big for you to experience financial freedom. All right, so I'm looking over here at my notes. I just want to make sure I covered everything. I did talk fast. I do apologize, but I wanted to make sure I got everything in here. So that's it. Yeah, it took us 2 short years to get out of debt. It was a short-term sacrifice for a long-term benefit. And that's it. That's all I have for you for today. Let me look here. Nope. All right. Well, any final takeaways, Mr. Peter?
No, I think you covered it. I mean, it's a very difficult blueprint to follow. It seems so easy, but it's very, very difficult because for years you're programmed to think otherwise. So, but once you do it, it is a huge weight lifted off your shoulder that you can, because you're always going to experience financial stress, and yeah. That's something you should, they don't teach us, right? How to, treat your budget like a bank does, and put it under a financial stress. So take away one of your incomes for 2 months, just 2 months, and see how you pan out, and that's all I can say on that. It's a fantastic program.
Well, thanks. Well, it's not my program. Just, again, modeling what the Millionaire Mentors taught me.
But it's something that you've taught all of us that have gone through the Success Academy. It's something that I always talk about with people, where the Success Academy, the trading options is really just it's almost like just one portion, a very small portion of what the Success Academy has taught us.
Yeah. So. Yep. Overall wealth building blueprint. Yeah. It's so much more in this trading options. So, well, everybody, that was my final lesson of 2019. Talked about my favorite subject that people probably get tired of hearing me talk about, getting out of debt. I highly encourage you. You can get out of debt and trade options at the same time. You can put a plan in place. Despite my mentors, Dave Ramsey is against active investing, so I just kind of ignore him when he talks about that. But the guy knows what he's talking about as far as getting out of debt, because that's the blueprint we follow. And I had struggled for years to get out of debt, and I just never did. So found a mentor who had a proven blueprint, followed it. I was like, man, I've been struggling for 10 years to get out of debt. And in 2 years, I took his course and we were done. Haven't looked back since. But anyway, so that's it. We will see you all in 2020. We will come back with something different for the public. But these recaps will continue for Success Academy members, and actually we will go into more depth. I'm going to do probably trade alerts. Hey, this is a trade I'm going to place today. You can walk through, watch me place that trade live, and then Peter's going to cover different things like that. He said he want to go more in depth into trades he's making. And then we'll come back with something different for the public to still keep you all engaged about the world of options and what we're up to. So you all take care. See you next
Thanksgiving.
Yeah. Happy Thanksgiving. We'll see you. This is our last one, so we'll take our annual winter break, our month off, and we will see you probably second week of January, give or take. I don't have it narrowed down yet, but we'll definitely see you in January. So until then, take care. All right. Bye-bye.